Welcome to today's news discussion. I'm Sonia, and I'm joined by Simon. We're here to explore the latest developments in global business and economics.
Hello, Sonia. Let's dive into our first story.
Volkswagen is reportedly planning to cut up to 100,000 jobs and halt production at 4 German plants as part of a major restructuring effort. The company is facing significant challenges, including tariffs, competition from China, and the costly transition to electric vehicles.
That's a massive number of job cuts. How does this compare to other large corporate layoffs in history?
According to the reports, this could rank among the largest corporate layoffs in history. The exact comparison isn't clear, but it's certainly one of the biggest in the automotive sector.
What are the main reasons behind this decision? Is it just the transition to electric vehicles?
The reporting suggests it's a combination of factors, including tariffs, Chinese competition, and the transition to electric vehicles. Volkswagen aims to reduce investments by 15% over 5 years and cut costs by 11 billion euros.
That sounds like a significant restructuring. How likely is it that these plans will be implemented without major opposition?
The article mentions strong opposition from labor unions and the supervisory board, which could challenge the implementation. Volkswagen CEO Oliver Blume is reportedly behind these plans.
So, what's the current stance of the labor unions? Are they negotiating with the company?
The reporting doesn't provide detailed information on the current negotiations, but it does indicate that there is strong opposition from labor unions.
Let's move on to our next story. Goldman Sachs has upgraded India's macroeconomic outlook for calendar year 2026.
That's right. They've raised India's CY26 GDP growth forecast to 6.8% while lowering inflation and current account deficit estimates. This is largely due to easing oil prices and improving domestic economic conditions.
What triggered this upgrade? Was it specifically the recent U.S.-Iran peace deal?
According to the article, the U.S.-Iran peace deal played a role by easing oil prices, which in turn improved India's macroeconomic outlook.
How significant is this upgrade for India's economic prospects?
Goldman Sachs has also lifted its FY27 GDP growth estimate to 6.5% from 6.1%, expecting stronger growth, lower inflation, and improved fiscal and external balances.
That's a positive outlook. Are there any risks mentioned that could affect this growth forecast?
The reporting mentions weather-related risks to rural demand as a potential concern. Goldman Sachs also anticipates a 50 basis point repo rate hike by the RBI in 2026.
Let's shift to another story. U.S. President Donald Trump has threatened to impose a 100% tariff on goods from any country that imposes a digital services tax on American companies.
Yes, this move has escalated transatlantic trade tensions. Trump warned that any country imposing such a tax would face immediate tariffs, overriding existing or pending trade deals.
How might this affect European countries that are considering a digital services tax?
The article suggests that several European countries are contemplating a digital services tax, which could lead to trade conflicts with the U.S.
Are there any specific European countries mentioned that are likely to be affected?
The reporting doesn't specify particular countries, but it mentions that numerous European countries have been discussing digital services taxes.
Let's discuss Apogee Enterprises. The company has seen significant stock movements recently.
Apogee Enterprises' stock price has been notable, especially after the company reported better-than-expected first-quarter financial results.
What were the key factors in their earnings report that led to the positive stock movement?
The article doesn't provide detailed financials, but it mentions that the company rose sharply after reporting better-than-expected results.
Are there any other significant developments or analyst ratings mentioned for Apogee Enterprises?
The reporting mentions that Apogee Enterprises is among other big gainers in the session, alongside companies like Acadia Pharmaceuticals.
Let's move on to our final story. Cryptocurrency exchange Binance has announced that it will no longer provide services to European customers.
That's right. Binance has withdrawn its application for a license to operate in Europe, affecting some of its European clients.
What are the main reasons behind Binance's decision to stop services in Europe?
The article suggests that Binance failed to secure a license under the EU's Markets in Crypto Assets regulation by the July 1 deadline.
How might this decision impact Binance's global operations and reputation?
The reporting doesn't provide a detailed analysis of the potential impact, but it indicates that Binance is adjusting its strategy in response to regulatory requirements.
As we wrap up today's discussion, it's clear that global business and economics are facing significant challenges.
Indeed, from Volkswagen's massive restructuring to the shifting economic outlook in India and the trade tensions escalating with digital services taxes, there's a lot to keep an eye on. And let's not forget the developments in the cryptocurrency space with Binance.
That's all for today. Thank you for joining us, Sonia.
Thank you, Simon. Until next time.